US stocks hitting record levels, rebounds in oil prices. Are politics rather than economics once again driving the markets? Colin Cieszynski joins me down the line to discuss. Colin, the Republicans gained control of the Senate in the midterm congressional elections. Now, given that the Republicans are promising no winter shutdown, debt defaults, etc., how influential was this in terms of market sentiment and investor confidence, or was the result already priced in?
I think overall the effect has been fairly positive for markets. It certainly helped to boost the U.S. dollar on Wednesday trading in the initial reaction. Into Thursday, we've seen it start to level off because the results of the election came in pretty much as people had been expecting. So some of the rally in recent weeks may already have priced in the Republican victory. However, overall, the victory has been seen by the street as being beneficial both for the economy and for the markets. It's felt that the Republicans are more pro-business, perhaps in some ways, than the Democrats, and that even if you end up in the situation of gridlock, at the very least, it would make it difficult for anybody to put through any legislation that's anti-business. So this is still generally seen as favorable and can help corporate earnings and markets over the long term.
On the other hand, the trade deficit in the US widened in September as exports slumped from a record. Some believe this is an omen of slower growth, to others an indication of a shift in composition towards more domestic demand. But what do you think?
I think you're going to see that we'll probably see a bit of a shift in the trade balance. It's important to remember that one of the big drivers behind this, and particularly the drop in exports, is that we've had a huge rally in the U.S. dollar over the last 2 months. It's gained about 8 to 10% against many currencies. It's driven commodities lower. So there's been a big shift there. And what this will mean going forward is that, of course, with a higher U.S. dollar, U.S. exports become more expensive in foreign countries, and at the same time U.S. earnings in foreign countries get translated back at a lower level into the U.S. dollar. So you are likely to see a shift from this big currency move that we've had over the last few weeks with putting more of an emphasis onto the domestic economy.
That being said, the dollar was stalling midweek, awaiting more impetus even after the positive ADP figures. What figure are you expecting tomorrow? And could it, coupled with Draghi's press conference, be the catalyst for a break lower in euro-dollar?
I'm expecting the non-farm payrolls to come in around 230,000, fairly similar to the ADP figure. We've seen ADP's been pretty steady over the last few months. Jobless claims have also been pretty steady over the last few months. If we got a positive surprise, say above 250,000, it may encourage, people may see that as encouraging the Fed to move faster on interest rates. So that could push the dollar higher. Anything between, say, 200 and 250 would probably be steady as she goes and not have a huge impact on the dollar or changes in expectations. A number below 200 could suggest that, maybe the Fed doesn't have to move quite so fast. That could put a bit of pressure onto the U.S. dollar.
Colin, great to speak with you once again. Thank you. Well, viewers, that's all from me for the moment, but stick with Dukascopy TV to find out all the market movements ahead of that all-important NFP figure. Thank you for watching.